Hi. First of all, thanks to KPMG for inviting us for the second year. My name is Ngozi Dozie. I'm a director in OneFi. The regulatory panel talked about a payments mafia. We're hoping that we become a lending mafia. So that's the goal, hopefully at the end of the presentation. Next slide, please. Oh, excellent. So we're a 5-year company. We focus on lending to the banked sector. We started off using sales agents, and we have gradually moved, as of last year, to a mobile platform. Next slide, please. Thank you. So history on the left-hand side, 5 years old, we've lent to just under $30 million. We've loaned about, to about 120,000 people. Moving on to Paylater, which is where we see the future. It's an Android app. All the loans are done within 10 minutes. It says 5 minutes here, but cash in your account within 5 minutes. We're doing about 1,000 loans a day. Average loan is about 20,000 naira. And we've done about 2 billion on the platform this year. We expect that number to be 24 billion next year. It's a big jump, and there are a few reasons why we think that's possible. Next slide, please. So we've all talked already about the issues in Nigeria, on the banked, etc. And I'll focus on, actually, let me get some crowd participation. How many here have gotten a loan in the last year from a financial institution? Just raise your hands. So there are about 300 people in this room, and there are 2 hands that are up, 3 at the back. And so that's the problem. And that's why when I say 2 billion to 24 billion next year via mobile, I'm very confident about that. There are about 300,000 credit cards in Nigeria right now, so I've been told. I believe that number. It's clearly not an indication of demand, but more the reluctance of financial institutions to provide those loans. Next slide, please. Just focusing on demand, if you think about Lagos as a country, if you look at Lagos in terms of population, in terms of GDP, it actually compares quite favorably with all the major capitals of East African countries, which has been the home to a lot of consumer lending. I mean, if you just focus on Nairobi, 4.1 million people, 25 billion GDP. I mean, Kenya is a place where they give loans out like tom-tom, like sweets, right? And Lagos has 3 times the population and about 3 times the GDP. So these are reasons why we're very hopeful. Next slide, please. And unfortunately for us, until recently, the majority of the consumer lenders that we know about have all focused on Southern and Eastern Africa. So Bayport, Leshego, Izwe, Jumo, have all stayed away from Nigeria. Maybe with this doing business jump, they will come, but for now we have the room to ourselves to create that lending mafia. Next slide, please. So let's talk about Paylater. So Android app, download, and then you fill out a form just like you would any banking application form. We do 2 credit bureau checks, and then we also run our own proprietary check using some machine learning to decide whether to give you a loan or not. If you are approved, the loan's disbursed. I think 70% of the people get the loan in 1 minute, so cash in their own bank account, and the balance get the loan in about another 4 minutes. So the loans run from 15 days to 6 months. Our lowest rate is 5% a month. Our highest rate is 30% for a 1-month product. Now, for a financial services product with high interest rates, we actually have a very high net promoter score, which is an indication of customer satisfaction of about 75 or 79%. So we're quite pleased about that. And if you go to the next slide, please. And the consumer feedback has been very positive. Not everyone gets a loan. My co-founder and CEO, Chioke, tried to get Mark Zuckerberg to get a loan, but he said it was good enough for cash. But the vast majority of customers, and you see this in social media, you see this in all the feedback we get, are extremely happy about the service because of the speed, the access, and the certainty. In fact, of the loans that we approve, only about 25% of them do not go on to take a loan. And we believe that what is happening is people are getting the loan and then going around to see whether there are other cheaper sources of capital from friends, from family, etc. So the numbers we're given are actually can be increased if we can get our rates down. Next slide, please. So there are a few interesting things happening. We recently signed with InterSwitch and other lenders to give loans via I think it's called the InterSwitch loan system, which is a system where InterSwitch provides information from banks, its banking clients, information such as POS data, ATM usage, products you buy on the InterSwitch platform, and to the extent the customers are willing to share that information, then InterSwitch acts as a channel to send that information to us, and then we can make an offer based on a scorecard that we'll build. So it's an addressable market of maybe 10 to 20 million banking clients from the banks at the bottom. And so this is a very exciting opportunity, and one of I think good examples of the ecosystem coming together, doing things, playing to their core competitive advantages. Next slide, please. So I had this Thinking the Unthinkable title, and as much as I'm talking about all these nice numbers, 1,000 loans a day, we're not even scratching the surface in terms of meeting the demand, and that's the truth. Talk about 30 million bank customers, 10% who have ever gotten a loan. I think the stats are Nigeria, for Nigeria, consumer debt to GDP is about 10%. That number is about 30% in South Africa, and the States is about 70%. It is inevitable that we will increase that ratio as we go along. If we go from 10% debt to GDP ratio, consumer debt to GDP, to Kenya's level of about 20%, we recreate the whole financial services system as you see right now. That's how impactful consumer lending can be in terms of economic growth. But we have to ask ourselves whether we are happy with the current state of affairs, or whether we want to work together, and I'm talking about the regulators, the banks, the startups like ourselves, the credit bureaus, because without collaboration, this doesn't work. The likes of Brazil, China, India have the same economic constraints as us, but they all have much better ecosystems, and the startups are going on fire. So are we happy with the fact that the credit bureaus right now maybe get 500,000 searches a month, whereas in South Africa, that number is 1 million a day? Are we happy that we're giving banks our savings, but not getting loans back? But every year we see billions of dollars of loans written off for corporate loans that have gone bad. Are we, Paylater, happy that we're giving consumers loans at 5% a month? That is not a cheap loan. When we know that if we could partner with a bank or other institutions, wholesale investors, that we can actually give credit-worthy customers lower interest and get the money back. And for all the things we say about the banks, about giving us access, sharing data, the truth of the matter is that the banks are more transparent than many of us fintechs. You read the annual reports, you read their customers, their segmentation, etc. And so I think for us to go to this nirvana, lending is very simple. There are 3 levers: cost of capital, cost of customer acquisition, and cost of underwriting, which is basically how many times do I give a bad loan? Cost of capital is very, very simple. We, Paylater, raise money at 27% a year. So it's T-bills plus 5%. It's what we're raising. If you want to invest, please let me know afterwards. But it's 27%. The banks raise capital at 2%, 3%. If I can partner with a bank, then I can bring down my interest rates dramatically because the cost of funds is coming down dramatically and we can share the profits. Cost of customer acquisition. Right now, majority of our marketing, if not all, is via Google and Facebook. These guys already have enough money, and I don't want to be giving it to them. But if I can partner with other startups, whether it's hotels or NG, Roku, Conga, Jumia, then I don't have to pay for customers. I can literally just say, ask your customers if they want money. And if they do fit my criteria, I can give them money. And the more data we get on these customers, the more I know about their customer profile, the more I can actually give more to the good borrowers and less to the bad borrowers. And that just brings cost of capital down, cost of underwriting, and then it means that we can give a lot more loans to different people. So I say thinking the unthinkable, but I think we need to do what is unthinkable. 3-4 years ago when we started this, it was you want to lend money to Nigerians unsecured. You don't even see them. Are you mad? We've proven that it works. But for us to take it to the next level, we really need the collaboration of all parties in this room, quite frankly. And I think we can really give the likes of Brazil, China, because I think you mentioned it earlier, the rails we have here are fantastic. Real-time instant payment, and it literally just left to us to do this. So this is more me imploring us to not just think and talk, but actually let's start doing the work. Because we can do a lot here. And I'll end, next slide please, with the fact that we're not just looking at Nigeria, and we're glad to say that in the next week or so, we will be launching a new West African country where we're taking Paylater and partnering with a financial institution in a bank to provide loans in that country. And so for us, if we can do this internationally, why can't we do it here? Thank you very much.